Welcome back to the second hour of Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again David Jensen. He is a mining executive, ex-mining executive, although he is also heading up a company of his own, a private company in the gold mining industry. He is an engineer by profession, and he is, I think, most importantly for our discussions here, also he is an advocate of Austrian school free market economics. Welcome, David. It's good to have you back again.
Yes, hello, Jay.
You know, you've been talking recently about a major global shortage of palladium that has taken place really largely because of the South African strikes, the mining strikes. I believe the miners have agreed to come back to work now. I'm not sure if they've finally settled that or not, but is that helping the palladium market out, or where does the palladium market stand right now?
Yeah, both palladium and platinum were scheduled to be in strong shortage this year, with substantial deficits in terms of demand versus actual production from mines. To begin with, and the South African mines went on strike in January 23rd, and they resolved that strike last week. But because of the shutdown of the mines, they can't just be turned on again, and the articles I've seen have been saying about 3 to 5 months before they reach full production again. A lot of questions as to why platinum and palladium prices haven't moved all that much, although palladium is at an 11-year high, but it was expected to really fly. And the belief is that there's been a leased source of metal on the market, as well as sales from inventories, but that those ultimately those leased sources of metals, which are believed to perhaps come from ETFs, strangely enough, that metal has to be replaced again. So we've been seeing, platinum has been starting to pick up recently, and palladium is, as I said, at about $850 an ounce right now, which is a high price. But looking outside of the London and New York markets, where we get the paper trading setting the price, it's interesting to see the price on the Shanghai Metals Exchange quoting a $965 an ounce price, which is about $125 above the London and New York price for palladium.
Right, exactly, David. If I might interrupt, I'm just looking at the price here, the spot price on Kitco. We're looking at $840.
Yeah, so we're seeing $965 for palladium on the Shanghai Metals Exchange, and about $1,557 for platinum, which is about a $65 or 4.5% premium.
That's substantial.
Yeah, so those two premia should be extinguished because of the arbitrage that's there, and a relatively low cost to meet that market demand if the metal was available. And this really builds on Jay, your and my discussion previously about the 5% premium for silver on the Shanghai Gold Exchange. So I think what we're seeing here is that we're seeing physical starting to dominate, and that there are now basically we're seeing the divergence or a bifurcation of the market. One is a physical market where you're actually dealing with the real metal, and the other one is a market where you're dealing primarily with digital instruments and calling them metal. And there's lots of that digital gold and digital platinum and digital silver and palladium available. You can have as much as you want. But the physical markets are telling us a different story, and I believe that as this becomes more and more clear, we're going to see this dynamic accelerate now.
Let me just trying to understand this, how the ETFs should be holding the metal and selling them as people sell their ETFs, and they would go out and buy more of the metal when there's more demand for the ETFs. I think that's the way they're supposed to work, right? But I guess it's possible that the ETFs can be nothing more than a paper play in and of themselves, such that people think they're buying palladium when in fact the palladium isn't really there. Then the palladium operator, the people that are operating these ETFs, could be leasing that out. Is that what you're suggesting?
Well, I've seen a couple of articles heading in that direction with respect to South African ETFs. Yeah, so I don't have the evidence to support it.
Yeah.
But it's an interesting note that that this is a small market which was already facing over 1 million ounce shortfall in both the palladium and platinum production before the year started, and all of a sudden, we've seen this stoppage or a great reduction in production from the South African mines. And also, we've seen now Putin announcing that the State Metals Agency in Russia was going to enter the palladium market and buy metal, buy palladium. And I mean, when you're looking at the supply coming out of Russia being about 40% of global palladium production, they could have a substantial effect. You know, in a period where there's already a shortage, they would be augmenting that the shortage. So
yeah.
But anyways, the dynamic overall appears to be one of basically now it's a tale of two markets. And I think that's going to continue and become more clear as time goes on, and eventually it'll infiltrate the gold market, you know, which is probably the last holdout because of the official sector gold, which could be used to play games here.
Yeah, I mean, for example, Goldman Sachs recently picking up gold from Ecuador.
Yes, and
could prolong the manipulation a little longer, perhaps.
Yeah, I think that that gold will be the last holdout, but I would think palladium and platinum may be the first ones to really start to fly.
David, to what extent can there be substitution between platinum and palladium for catalytic converters?
Yeah, it's already happened. You know, platinum rose so strongly in 2010 in price that the substitution happened using palladium in gasoline engines. And the diesel engines, unfortunately, or fortunately, depending on how you look at it, you can only use platinum as a catalyst in the catalytic converters. So you know, these are used industrially in numerous processes, but there's very little substitution possible for these two unique metals.
So you're suggesting that first is the metals that are in the tightest supply, that is the precious metals that are in the tightest supply. Due to the miners' strike, we're seeing enormous premiums paid there for delivery. Silver is showing some pretty high premiums as well. And gold, it had been in and out, but it had been also really extraordinarily tight in terms of the GOFO rate, right?
Yeah.
And where does that stand now, David?
It's the 1 month GOFO, the gold forward rate is at about 0.08%, so it's just hovering around the zero mark. But I think what's interesting there is that even with these vast official sector holdings of physical gold, that this has been cycling in and out of a negative rate now, which is historically significant. So the silver seems to be, you know, of the major precious metals, the one traded in London and New York, which appears to be in trouble. It's been very, very subdued. But silver looks like it's with the 5% premium there in Shanghai and the large volumes that are traded. You know, kind of the canary in the coal mine of what I think is coming for gold as well.
Yeah, well, speaking of a canary in the coal mine, another one might be something called special drawing rights. Special drawing rights, I recall, I'm old enough to remember, and I don't think you are, David, but I was old enough to remember August 15th, 1971, when Nixon removed gold from the international monetary system. And they started to suggest that we could have something like special drawing rights that could be used in place of gold. And you're saying there is now a lot more talk towards reverting back to some SDR system. What do you make of that?
Well, it's this special drawing rights are a basket of paper currencies, and it was developed in 1969 by the IMF, the International Monetary Fund, and they called it paper gold, which is probably an apt name for it because it is just that. It's just more paper. You know, a basket of currencies as a substitute for the U.S. dollar in international trade. When you look at a basket of currencies, and now the discussion I've seen from a number of sources is perhaps a percentage of gold as well. But when you throw together a package of ill currencies that all have the same terminal sickness, a basket of them is not going to be any better than dealing in U.S. dollars. So I mean, we need a stable currency. We don't need a basket of unstable currencies as some kind of a salve to the wound of the economic system.
But there is some talk of gold, a percentage of the SDR that would be not just paper but gold as well.
Yeah.
Physical gold.
Yeah, well, notionally,
Yeah.
held by the central bank. So it's,
Yeah.
it's just basically they're giving a nod to it, as if
Uh-huh.
that's going to, increase the legitimacy of the SDR. But
Yeah.
it's just more of the same stuff, Jay. It's
More of the same con
yeah,
artistry.
yeah,
Sleight of hand, essentially, because I have to think, nobody knows how much gold the United States has. It hasn't been audited since Eisenhower. Nobody knows for sure how much gold China has, although, as we've talked on this show, there seems to be a huge flow of gold into China. All the evidence points that China is probably picking up an enormous percentage of the gold that was held in the Western world before, because after all, we've all been programmed to think that gold is a barbaric relic and that we'd be much better on a PhD standard than the gold standard. So there's no reason to audit gold. It's a barbaric relic anyway. So
yeah.
nobody knows how much gold there is, but somehow the real world comes back to needing something tangible that's real and not make believe. Animal spirits type of crapola that we get all the time from the establishment. So I guess what. So why in the world? I mean, it doesn't really make any sense, does it? SDRs. I mean, to me, it doesn't make any sense. It's just another part of the con artistry.
Yeah, it's part of the battle against market forces. The markets over thousands of years have chosen gold and silver as money, and paper money has been put forth by fiat or government dictate as the current money, and as a consequence, there's a battle against the market choice. And we're seeing, the paper markets in terms of platinum and palladium and silver as being the ones which are indicating to us that they are, in a state of decline. All is not well. So yeah, it's the battle against reality, really, and it's one that the markets will always win. And sure, we'll have SDRs for a period of months, and then that will fail too, and then you're going to have chaos instead of dealing with the underlying issue that paper currencies operated by central planners, who are trying to send everything, to achieve escape velocity with our economies, and their paper games just don't work.
No.
Central planning doesn't work, and paper money doesn't work, and we know that.
We know that, and we've had decades of experience to show us that, yet they keep doing the same thing. The definition of insanity, I think it was Einstein that suggested that they keep doing the same thing and expecting different results. And it doesn't make any sense unless there's some method to the madness that we don't see. But that's a topic for another day. Another topic I'd like to ask you about, it wasn't long ago that there was talk about the copper markets were hit hard, and I think the iron markets as well. There was talk about multiple pledges of the same metal in China against loans. And when that was revealed, then those markets got hit pretty hard. Now we're, according to a June 26 article, Zero Hedge noted that up to $80 billion of gold-backed loans are falsified, according to the Chinese insiders in China. The article was suggesting, Zero Hedge was suggesting that whereas the hypothecation of those other metals were bearish, in the case of gold, it stands to be bullish. Could you explain how that could be so? Because I know my partner Chen Lin suggested when he heard that this news that he suggested that might be very bearish for gold. But why? Can you explain Zero Hedge's argument why it might be bullish?
Yeah, I think it's probably bullish for both metals in that metal that was believed to be extant and acting as collateral for loans is actually not there, meaning that the demand is strong. I mean, China right now, house sales in the first half of this year are down 23% versus the first half of last year. And yet this morning we have copper at $3.20 and up quite strongly in the markets. So, I mean, it hasn't gone back to 50 cents, which is where it was a decade plus ago. So, there's something else at play here, and it is that, the metals, you can't print them, and when you print money, it tends to increase the price of the metals. In terms of the gold dynamic there and it being bullish or bearish for gold, the theory was that if a bank had a loan and had gold as collateral, it would have entered the market and hedged the gold that it held as collateral by selling forward a futures position to protect themselves against a price drop.
Mm-hmm.
Now, if they don't actually have the gold and they've sold forward the gold that they thought they had, they notionally should have to enter the market to buy it back.
Uh-huh.
And that's where the theory comes from, I think, that this is bullish for gold. Now, it depends on how you look at it. Like, if you look at the Chinese market, where they would have had to sell, if they had tried to sell gold forward, they would have had to have the bar to deposit it at the Shanghai Gold Exchange before they could sell it forward. And because we know that the gold does not exist, they could not have done that. So these positions that are notionally hedged by forward selling must have been sold in some other futures market where you don't actually have to have the metal.
Uh-huh.
And the Gold Corps article from last summer pointing out that there was 280 million ounces of gold traded every day in London.
Ridiculous.
Yeah, if you're looking at $80 billion worth of gold, let's call it 60 million ounces plus or minus. That's a quarter of a day's trading or less in London. So, I've got to go buy back some paper positions which I'd sold. Well, okay.
Yeah.
Of interest, but it's not a market mover in my mind.
Right.
But I think what is of interest is that, again, we can see rehypothecation scandals and fraud in the gold market popping up, and that gold that people thought existed is not there. And I think that information is going to light up the physical markets in terms of all of the precious metals, a growing awareness of just how vast this shortage is of actual metal versus paper.
Yeah, we can certainly hope that the scoundrels that are engaged in this kind of sleight of hand and have been engaged and have been getting rich from it will sooner or later get their comeuppance, and which leads me to another article I'd like to ask you about. Michael Krieger has been on this show in the past.
Yeah.
And he's written an article called "Ex-CIA Officer Claims that Open Source Revolution is About to Overthrow the Global Oligarchy."
Yeah.
Could you summarize Michael's arguments and perhaps just, it was a very optimistic article, I must say. The notion that maybe these ruling elites, these people that are really basically raping and pillaging the middle class, driving them out of existence, essentially legalized thieves, that they may, that sooner or later there may be some justice here. Could you talk a little bit about Michael Krieger's article and what that's about?
Well, I mean, Michael Krieger's article was based upon a June 19th article from this year from The Guardian. And it was titled "The Open Source Revolution is Coming and It Will Conquer the 1%, says ex-CIA spy." And it's about a guy named Robert David Steele, who was an ex-CIA, former Marine officer as well. And he had started this kind of movement towards open source intelligence and saying we don't need these vast intelligence agencies. And he was saying that in the 70s and 80s. And he was basically squeezed out of those services because he pointed out that they had a product which wasn't needed. And what he's basically saying now is, because of data transmission globally, that we are about to have a turning, and that he sees all of the pre-revolutionary indicators which you see in other societies before there's vast change, that he sees every one of his boxes as having been ticked off in terms of you have all of the requirements met before incipient change happens. So, I mean, this guy, Robert David Steele, it's interesting. He's got apparently a very powerful intellect. He's the #1 reviewer of books, of nonfiction books on Amazon, in 98 different categories, and I can't even begin to imagine, the cranial power that he has that he can apply to things. So, it's a very interesting concept, and it makes sense. Thinking back about Dinesh D'Souza, and he's been basically pursued by the Obama administration for some documentaries he's done about Obama himself, and he said that Dinesh D'Souza comes, of course, from the Republican establishment, but he's also, I think, a very strong libertarian. Mm-hmm. And he said that he likens his situation and the global situation to when he said a former college professor talked to him about politics and equating the political game to one of lion taming, and saying that the lion tamer has a chair and a whip, and he might be in there with half a dozen lions, but then the question was, who really holds the power here?
Mm-hmm.
And of course, it's with the lions. And I think that analogy really fits in well with what Robert David Steele is saying, that as long as the lions or the public are docile and really put to sleep in terms of information that they're receiving about the state of things, that they they're easy to control. But when they start lifting an eyebrow and kind of looking around a little bit and noting things, you can have change very quickly to the detriment of the lion tamers.
Yeah, indeed. And I like to equate it to Pinocchio's nose. The lies can be told for a little while, but ultimately they no longer are believable.
Yeah.
We get lies about the gold price, we get lies about the GDP and the inflation rate, we get lies every which way you turn, sort of spin artistry and con artistry that is combined to keep the people, I like to say, down on the mushroom farm, keep them in the dark and feed them fecal matter, and that's basically what is happening. So ultimately, though, Pinocchio's nose keeps getting longer and longer, or the lions are really in charge. I guess what we have to be concerned about, though, is will they be friendly lions that prevail, or will there be something worse? I mean, that's always a concern. It's easy to look back at and say how evil and how bad things were, but now how do you make them better? And can we get back to something, a recognition of individual responsibility, and how free markets work so much better, because people don't understand that at all, David. They just absolutely have been talk about keeping people down on the mushroom farm. They don't teach anything about economics. It's all about animal spirits, and you can just keep consuming more than you produce, and you'll be going to be happy, and everybody's going to be prosperous. And it's just the big lie that is being told. So unless the Austrians, and thank God for von Mises, for the Mises Institute and other people that are doing, I think, a good job of helping to educate young people about this. Maybe there's a chance. But certainly, David, Michael Krieger's article casts some hope, at least. I have to ask you, we're about out of time here, but I just want to ask you, Bob Hoy, who is an analyst out of Vancouver, your fair town there. I read him all the time, and he's a technical analyst primarily, although he's also pretty much a free market guy. But he's looking at the gold markets, and he's noting, as another newsletter writer or so that I've read just recently, that the commercials, that would be the bullion banks, had been quite long. They had a net long position, which was uncharacteristic for them. And more recently, though, they've switched very dramatically towards a huge short position. And Hoy notes that whenever this has happened in the past, we've seen a fairly dramatic decline in the gold price. Now we're sitting a gold price these days, I don't know where we're at, about 1320, something like that. And he's suggesting we could take a $50 or $100 hit in the paper markets. Of course, Bob is looking at the paper markets. Any comments?
Well, I mean, that's about it. It's the paper market, and I think you could move $1,000 in either direction with the flip of a few switches. So, I mean, for me, Jay, I've just got to look at these fundamentals, and basically the paper and the physical markets appear to be parting ways. And anything can happen in the paper market because it's really it's a fiction in my mind. It's a creation, it's a distortion, it's a distraction. And I really think we have to just look at the physical market and realize that it's an unsustainable dynamic which is at play, and just let it play out.
Yeah, and I guess maybe a bit of advice to our listeners is that you can use this time of lower manipulated prices to pick up some coins here and there at prices that will probably look very, very attractive in the not too distant future, if and when Pinocchio's nose actually does grow to the extent that people start disbelieving all the lies and propaganda that we're fed every day in the mainstream media.
Yeah. I think that the signs of the disruption in the Middle East is an indicator to us that there's something at play here that's going to change quite strongly. And I think when you have currency disruptions, you have oil disruption. And certainly the gold, silver, and other precious metals markets have been increasingly tense for the last 12 months especially. And then now we have this manufactured disruption in the Middle East with U.S. and NATO, UK funding of these terrorists, if you want to call them that, the ISIS players and others, Al Qaeda.
Yeah.
And as you talk about mushroom farms, this whole Al Qaeda show, which we've been entertained with and feeling terror about now for a long time, and justifying all kinds of mass destruction of the Middle East, seems to be ramping up. So, it looks like just this show is just going on and on and on. And I think that the Krieger piece and the comments there by Mr. Steele of imminent change, I think that is indeed the case, because I think people are probably at their limits. Many, anyways, enough to change things in terms of the, sick of manufactured, Western manufactured terrorism as a justification for destroying, vast areas of other countries and other civilizations.
David, it's very difficult to get Americans to pay any attention to geopolitics and what's going on internationally. We're intrigued by, I guess, right now internationally, about as close as most Americans get is the World Cup. But in terms of real serious things that are going on, it's very difficult to get Americans to pay much attention. But if they could just understand that on the one hand, we're supposed to be waging war against Al Qaeda, but then we're funding Al Qaeda, and that pops up somewhere else and destroys Iraq, what we were supposed to have lost, $1 trillion of treasure and many, many lives over. Then all of a sudden, it just doesn't make any sense. So perhaps Pinocchio's nose will get long enough. Perhaps people will recognize that they're being kept down on the mushroom farm, and we can hope at least that people will start to see the light. Well, certainly people that listen to this show have been educated to a different viewpoint than the mainstream, that's for sure. So we try to do the best we can, David. I know you do all the time with your friends and people you know and love. Try to help them understand what's really going on, and that's really the purpose of this show. So I want to thank you very much for joining me. Again, anything else you'd like to mention before we discontinue our discussion today?
I think probably just keep an eye on the physical markets and see what's happening there and track that premium over in China. Something's going on, and we'll see that play out in the weeks and months ahead.